Perplexing is the word being used by some to describe today's jobs numbers, with the headline number falling far short of expectations, but unemployment down and participation up. For the perspective of the White House on these numbers, we welcome now Dr. Jared Bernstein of the Council of Economic Advisors. So, Jared, thank you so much for being back with us. Give us your interpretation, because they did seem to conflict with each other. Even the household from the establishment numbers conflicted.
Well, first of all, David, it's always great to meet with you on Jobs Day. And let me tell you that I see no conflict in this report. And the president said this very clearly in comments this morning. I mean, this is a jobs report that once again underscores the very strong labor demand conditions in this job market and the extremely welcoming opportunities for people who are coming in. And by the way, one of the things we saw was a tick up in the participation rate. Obviously, that's been long awaited. It's 1 month. We're not going to make too big deal out of 1 month. We're going to see if that develops into a trend. But what we know is that hundreds of thousands of people came into the labor market. They didn't just get jobs. They got good jobs with rising wages. The unemployment rate falling faster this year than it has ever fallen on record, down to 4.2%. It took 9 years for the unemployment rate to get down to 4.2% after the housing bubble imploded and that downturn. You know, the CBO predicted it would take until 2024 until we saw an unemployment rate this low. So the Biden job generation machine is pulling into that station 3 years ahead of schedule. So we view this as a report that's completely consistent with the president's economic agenda, providing good jobs, strong bargaining power to working people.
The Biden job generation machine, you might want to trademark that, Jared. I'm not sure. But is it possible that could run afoul of the Jay Powell, let's not have the economy overheat here, by pulling some of the punch out of the punch bowl?
You know, I was just writing about this on Twitter this morning. If you look at the employment rate, so the share of the population employed, and I know that you and I and Tom Keene and folks in Bloomberg like to get under the hood and look at some of these indicators. We're in the midst of one of the strongest V-shaped recoveries in employment rates that we've seen in many decades. In fact, I believe in the record going back to 1950. That is a direct result of Joe Biden's fiscal policy, checks in pockets, shots in arms, and monetary policy as well. We don't talk about the nuances of monetary policy here, but certainly it's been very much supportive of pulling this labor market recovery forward in a big way. The president remains focused on getting those vaccinations out there to continue to build on the importance of getting the American people vaccinated and the economic connections therein.
So let's just pick up on that. From your point of view, as you advise the president on the economics, what are you telling him about Omicron and the possible effect it could have on the economy?
Well, first of all, one of the things we're very careful to do in this White House is not confuse economists and scientists. There are three big outstanding questions in terms of that connection with Omicron: its contagiousness, its severity, its evasion, its ability to evade the vaccine. And those questions are for our scientists to answer, not our economists. What we're seeing is an extremely strong labor market recovery, but also, if you look at expectations for fourth quarter GDP growth, and I'm talking real here, so we're factoring in inflation. I just saw this morning from IHS, their expectation is for fourth quarter GDP to come in at 7.5%. Okay, that is a very strong clip. It certainly reflects the underlying strong labor market that we're seeing. Now, whether the outlook on Omicron changes that, we'll be the first to come out here and talk about it, but I'm certainly not going to speculate about scientific questions, and the answer to those questions are going to be the determinants of its economic impact.
Fair enough. So I have to ask you, though, if the jobs market is that strong, the economy is that strong, why doesn't that say we don't need Build Back Better? I mean, isn't there a danger of overheating at this point? Or are you really pursuing Build Back Better for reasons other than economics?
Build Back Better is very much an economic agenda. It's also very much one in terms of helping working families. I think what we have to really distinguish here is, again, I'm going to talk to you as an economist because we do that on Bloomberg, the difference between cyclical and structural. We're talking about a cyclical bounce back in the unemployment rate, the likes of which we've never seen. Now, we're still not back to full employment as gauged by where we were before the pandemic hit. hit. And we also know that many American families face stressors in their budgets. I'm not talking near term now. I'm talking that this is something that's been going on for decades and that this president came into office to address. The cost of prescription drugs, the cost of raising children, the cost of housing, the cost of education. He has been talking to me about stressors on middle-class budgets since I met him before the Obama administration took office, when I was his chief economist, when he was the vice president. And he now has a set of legislation that's going to deliver structural cost relief to families for years and decades to come. And that is Building Back Better.